Welcome to Trading Lounge and the US indices for Friday, November the 18th. I want to start with the volume on the S&P, and this is a weekly chart here. So for a trend to be a trend, it needs to have increasing volume, and that doesn't matter if it's a trend going up or a trend going down. It needs increasing volume, obviously, to keep going along. So like this little move in here on the weekly chart, we see slightly increasing volume on each bar. This bar here moved up, but it moved up on lower volume, so that's what we'd call divergence. So so this is telling us there's weakness coming into the market. We're not getting increased volume, so we are seeing that weakness here. But this weakness we're seeing it on lower volume. So lower volume corrections are on lower volume. So if this was going to be a bear market at this point here, then we'll need to see increasing volume. So we haven't seen that. We haven't seen the real sellers come in yet and take control of the market. This is on lower volume, so it's corrective. It's a bit like this bar over here, if that lines up here. So the trend has been down on increasing volume here, yep. And then the market goes up, but it goes up on lower volume. So that's divergent, so that's a corrective move, and then it's gone up on that, so it's possible, turning point there. So this move here, we're seeing it as corrective at this particular stage. Let's just have a look at this on the daily chart, because it's the volume that confirms the price action. So we're seeing over the last few days here, we're seeing decreasing volume here. Now I know TradingLounge can, TradingView charting program, they can add the curb trading, after hours trading onto this volume, and it might be increased at that point. So, I can be wrong, but so I noticed that they do that. So, yeah, so basically what we've been looking at is a move down on lower volume, so it's likely to be corrective. We also know when a market comes up and hits, such a large number at 4,000 here, it's going to stall here, let's just put it that way, and it's doing that, and it's stalling, and it's being sold off and all the rest of it. Patterns can be a little bit complicated around large numbers as well, because large orders can pull the market and skew the count and the way Elliott Wave count and so on. So you need to be a little bit sort of philosophical about things, but we're seeing the move down on lower volume, so it should be corrective. So we should see a move up at this point. That's the general sort of gist of that. I'll just have a look through here for a moment on this is the iShares I value on this. So this is the count that we're looking at here, really, as wave 1, 2, 3, 4, and 5 moving up there. I'll just have a look at the value, Vanguard's world total stock market here. Once again, we see that pull down on lower volume, and we can see the count as 1 and 2 and 3 and 4 and 5. Now the Elliott Wave count for this wave 4 may start already in this little area here, but anyway, we'll take it from the top. Let's just have a look at this is the low volatility stocks, the Berkshire Hathaways. So we're at a large number here, and 1 is, according to me, whatever that means, as 1 is the strongest number in the market, and it can really skew the pattern and hold it there, and that's exactly what it's doing there. So let's just have a look at, we'll look at the EPS, have a look at the E-mini here, the ES. So yeah, we're looking at 1 and 2 here, and 3 and 4 here, and we're seeing a bit lower volume here, so we need to see that push up. Basically we're looking at 1, 2, 3, 4, and then 5 to go up here, and then some sort of correction to counter trend this particular 5-wave structure. At that point, I don't know if it goes to here and then comes down at that point, or we're going to be taking this, if we take that second top out there, then we're going to be going up from that point. It's pretty much as simple as that. So we'll make our, we'll be, I'm just going to be open-minded and gather the evidence and look at the facts, and if that top gets out, then we'll be bullish at that point. If it doesn't get taken out, we'll be bearish at that point. We'll be going short here after 3 waves to the downside. We can improve on that. We'll talk about that a little bit more, but basically that's where we stand. The only other thing that I can see at the moment is that we may have this 5-wave structure that I'm talking about here. We may have it in here as 1 and 2 and 3 and 4 and a really little 5 waves here, because that's a kind of behavior that happens at large numbers here, and that means that we would just come straight down from this point. So we need to take that on board as well. And in fact, when I look at the Russell today, that appears to have 5 waves down here. There are some stocks that that have also got a little 5 waves down here, but most of the stocks are, we'll have a look at a couple along the way. They've basically got a little 4th wave here. So this is a weekly chart. This particular chart is a CFD chart. So a CFD chart, contracts for difference, is made up of the cash market and the futures market and a thing called fair value. So it can be at a different price, generally speaking, than the E-mini or the cash price, SPX, and so on. So yeah, let's talk about a few things here. So one of the main points that I've always sort of held to around all of this is that if this number here becomes the tested support, then we'll be on the long side. And for tested support, we need this pattern here. So if that's the 4,000 across here, we need the arrival, the reaction, the first high. But it needs to basically migrate from being resistance to support. So we've got that pattern, or we can have this pattern here, where it doesn't drop back below the level. But I'm thinking this is the second most common pattern, and this is the most common pattern here. And the other pattern that occurs, which is less common, is that it doesn't stop over here and react here, it just goes straight up. But it's good to know those. It's good to know those 3 patterns. So this situation here, we need a classic, like I just said, we need a classic trading levels pattern sitting on top of this level to go to, you know, as a tested support. Because trading up here, see how that's moved up here, it hasn't come back and tested it. So it's tested it here, but the test didn't hold, you know. So we would go long above this B wave here. Of course, we can improve on that, but this test, the breakout's important. The retest is just as important. Every move is important. So the retest failed. See, over here, it came up and hit it, you know, dropped back here, pushed up through it, came back and tested it, and then took any of these tops will be fine to go long on. So we're kind of looking for something like that. But you know, this particular pattern here is this pattern here where it didn't drop back below the level. You know what I mean? So most of the time it will drop back below the level. So anyway, that's what we're sort of looking. If we get support on the 4,000, we'll be bullish. If we don't get it, then we'll be bearish. Now, on the bearish side, we can look at it as wave A, B here, and then 1 and 2 and 3 and 4 and 5 for the C wave down here, right? It's also possible to look at this in a different light. We could look at it as a W and an X and a Y here, and in that case that would be an A wave, a B wave, and a C wave here. So it would only have another leg like this here tacked onto over here. So this one here would have some sort of equality to this one. So yeah, there's different ways to look at the bearish side of it, and I think it's healthy to look at you know, different counts that you know that are you know, that are valid, you know. So anyway, let's drill in here. So we can also see here too with the stochastics here, this is kind of tuned in a little bit to the tops and bottoms here. So you can see that it's up here at the moment, and you know, it looks like it wants to fail here at the moment, doesn't it? And just sort of come down at this point, you know. But I was just sort of thinking that we just need one more little top to come in, and then we can come down at that point, you know. But we'll see. I need to validate and prove every little step, so we're not there just yet. And besides, indicators can just flatline, you know, as the market goes up, you know, they can just, you know, just flatline here. So you need to go up to the next degree of structure for all of this. Okay, so enough said there. Let's cruise into the daily chart. So this is kind of what we're looking at here. I'm just going to close these up. We don't need these here. So we're at this 4,000, which is the medium level. It's also the 61.8% from from this point here with this in this particular rally, and so it becomes quite important, this area. Now, this move up here, I think, counts better as more of a corrective pattern, but you can have it as a leading diagonal triangle. So we can look at all of this as being bullish, or we can look at it being a corrective rally. So in due course, it will work its way out and it will work itself into a corner, and it'll come out of that corner. And what we need to do is just step on to it at the right time. So yeah, so in this case here, we can look at it as the A wave, the B wave, and the C wave up here with 1, 2, 3, 4, 5. And that could be wave 2, or it could be wave B for the bearish count. Okay, so yeah, but it's got to finish up here. It could be finished. We could squash the wave 3 up there and the 4 here and bring the 5 down, and that's it's finished here. But if that was going to be the case, we need to see, it's quite simple now. We just need to be, if Friday is bearish, then we've got a top in place. If Friday is bullish, then we're going to follow this pattern 1, 2, 3, 4, 5 here, and this will take about, this took about 4 days, so this will take about 4 days. So if Friday is bullish, then Monday's going to follow through on that. You'll see profit taking coming in on Tuesday, and then the trend resuming on Tuesday, and then we'll start to see Wednesday and Thursday as swing days and possible tops at that point. Now, like I said, we need to see 1, 2, 3, 4, 5, and then we'll need to see an A wave, a B wave, and a C wave, and then we can go long above that. We can improve that, but we'll need to talk about that when we get there and on the intraday. And if we're going to go short, well, then we'll be short over here, because anything below 3 waves would have to be bearish, and we can be bearish at that point. So we'll be looking, you know, we'll just be, I don't want to have any opinions. I just want to follow the facts of the wave count to the best of my ability and make decisions off those facts. That's all I'm going to do. So I'll try not to be emotional about it and all of those sorts of things. Yeah, so that's sort of where we are. We're going to go in and have a look at the bullish count and the bearish count, but we'll just finish this off on the bullish count, because we normally go here on the 50k ticks on the intraday, and this is pretty much what we're looking at here for this. So just cleans up. We could get one more little move down here, but I just don't think that we will, because when I look at some stocks here, just look at some big, this wave 4 is done for Apple, and we're sort of moving off. When I look at what's Google here, you know, this is not really giving me a bearish pattern. I mean, I could look at it as down for 1, back for 2, down for 1, back for 2, down, you know, so, but I'm getting 5 waves here now, you know, it's not too bad really. Yeah, it could be worse. But it looks more corrective than bearish, you know. And then this is Microsoft here, that's its wave 4 here. I mean, I could look at them as bearish counts, but yeah, they look kind of more corrective to me, you know, in that regard. So we're kind of going with that situation of being a wave 4 here. And yesterday we were looking for it to move down, and in our bullish weekly cycle we're looking for Thursday to be bearish and shoring up in the afternoon on the Thursday, and then Friday to be bullish and Monday to be bullish, and so on. So everything's sort of folding quite nicely. It did drop a little bit below its 38.2% retracement level, but not much, and didn't overlap wave 1 here. If it overlaps wave 1, then I've got it completely wrong, and that means we'll be going short. We'll need to be, if it moves down here, if it moves something like that down here, then we've got a top in place. But don't panic either, because if it's got a top in place, we're going to get some sort of larger 5 wave structure down, and then we're going to get a counter trend to that. So in that counter trend, we'll be shorting it in the counter trend. Okay, so you don't need to, because if you chase it late, you'll get caught, you know. You won't get much out of it, you know. So you've either got to be short up here and get it on the turn, or get it on the rebound, you know. We're going to have a look at the bullish count as we normally do on the 20k tick, and this will be it here. So this is So this would be looking at a leading diagonal triangle to the upside as 1 and 2, and then 1, 2, 3, 4, 5 for 1 here, and then back for 2, and then we're going to go long above the B wave, but we'll go long on another little classic trade. This is the classic trading level pattern, the arrival, the reaction, the first high above the level, the ABC, but we'll get a smaller one in here, and then we'll also try to build in through here as well on this. We want to be building at the beginning of the trend because this will be the third of the third, and then there'll be another one in here of the third here, so there'll be the third of the third of the third of the third. So in some point here will really take off, but we'll be all over it at that point. But just going to move these because when I close the program it just closes up and I don't have much room on the chart for objects and things. Now the 4,100, there's a lot of option orders there, so that's going to create nice resistance, and also 1 is the strongest number in the market, so 1 is a really nice thing there. But between 0 and 100 here, there will be 10, 20 and 30 for group 1, 50 the midpoint, and then 65, 72 and 80 for group 2 there, breaking that empty space down into solutions. So anyway, that's the bullish count. Yeah, so I mean, basically what we're going to do is just two things, really. I mean, obviously day traders can trade in this. If Friday is strong, then go long, as that's the thing. But for the trend trading thing that we'll look for is we want that to complete, which will be about 3 or 4 days. Then we'll need this here. And then we'll start to build in on the long side over here, or we'll be building in on the short side over, because we'll be way over here before we be, and this will work itself into corners over here as well. So we'll just be really focused on the intraday. We'll be looking to build to the long side or to the short side, because once we get this over here, this is where the whole thing will start from, either down or up at that point. So I'm just going to keep an open mind, and I'll just sort of stay with the facts and you know, make my few little mistakes, but basically get on that gravy train, you know. So yeah, and like I said, even if it drops down here, we'll catch it on the rebound here. But if Friday is bearish, then Monday's going to be bearish as well. Okay, so just Friday is kind of key in all of this. So yeah, let's just cruise in. I don't think there's much on the 10k tick chart here, just the same sort of thing here with all of that. I don't need to go into that, something that we probably talked about yesterday or something, but we basically came down to a 61.8%. This down here, you know, I mean, I can count it in different ways, but every way I count it is kind of a little bit dodgy. Even the move that I'm looking up here doesn't count as 5 waves here. It counts as a corrective wave. And I think to myself, well, can we have 1, 2, 3, you know, can I put this over here as the A wave here, the B wave here, and then look at this as 1, 2, 3 here, and 4 here, and then down for 5 and have that here? I don't think so, because those stocks that we just had a look at, they're already started. So I've got to kind of put it over here. So it looks like we've got some sort of WXY in there, but I can get an ABC out of it, but I'm not getting a nice 5 waves in here either. So there's problems all over the place, you know, with this. So all I can say is that if Friday looks strong, or if the 39.50 in this case, that's the midpoint, the halfway between the 39 and the 4 here, the next important one is the 5 here, so the 39.50, if you can get a classic trading levels pattern sitting on that and get a little bit of orders in here, and you know, maybe 2 in here somewhere, and then build on top here and get up to 450, 480, then you're doing quite well at that point with all of that. But yeah, this is dodgy as hell here, all of this. So it's a bit, you know, I'm just being a little bit philosophical about it. Anyway, let's continue to go in and refine this. So yeah, so I just talked about that, taking the top out there for that, but just make that a small position, because I just, you know, just something small, and the stop would need to go under here if that's breached at that point. So yeah, but when I draw a line like this, it's not so much taking the top out there, it's more about looking for the first high above the level. So looking for that first high above the level there, once that comes in, and then using that to go on top there, then you can bring it down to the second high and refine it that way. So I'm just going to remove these anyway, but that's we normally say, you know, what would Putin do? Who gives a shit what he would do next? Evil little bugger. So, sorry about that. Just don't see how one man can cause so much bloody problems in the world. We're still such a primitive world when I look at it. Anyway, can't talk politics. Rightio, let's cruise into 1K tick here. So yeah, I've looked at this in different ways. We could look at it as 1, 2, 3, 4, and 5 here with the A wave and the B wave and the C wave here. That's one way to look at it. See here, I can see that this is 1, 2, 3, 4, 5 here, so that's nice. But this here, you know, is that going to be 1 and 2 and 1 and 2? It looks like an A and a B and a C wave up here. So getting that top taken out here would be good. I can see that that could be counted as an A and a B and 1, 2, 3, 4, 5. Let's just go into the 100 ticks. Need some more data in here. So, okay, so I've been poking this with a stick in different ways, trying to figure out things in here, but yeah, so the A, the B, this is another way, 1 and 2 in here. This is what we looked at yesterday, 1, 2, 3, 4, 5 for the third wave, fourth and the fifth wave here. I mean, each way I look at it, it's just not a very nice fit, you know. And then I come over to here and I was looking at this. I can see that this is 1, 2, 3, 4, 5 here. So it's a bit hard to look at this here, and it just, you know, this makes it a little bit corrective at this point. See, this will be, let me just have a look at this, will be important, and this. So it's 1, 2, 3, 4, 5. So that looks like 5 waves here too, actually. That looks like 1 and 2 here, and then 1, 2, 3, 4, 5. So that looks like it. And this is not giving me, the impulse love, you know. It's this will be some sort of A wave here, B wave, C wave here, for an A wave and a B wave and a C wave up here, and this is counting as 5 waves down here as well. That's so I wonder if that's just another sort of wave 4. That's where that's going to stall and turn there. So that's 1, 2, 3, 4, 5. That's a third wave. Oh, I suppose that's a C wave there. Yeah, no, we can still go with the A wave, the B wave, 1, 2, 3, A, B, C, and down for 4. So yeah, so that's okay at that point. It will stall here because of where it's the ratio of 61.8. So, but yeah, I'm still not getting the 5 wave structure coming off the low here for this. So just to be safe and sure, you want to have that 39.50 as the support before going long, okay? And then coming into group 2 here, you can see that you're going to be going into a nightmare here. So getting one small position here and then another small position once this group 2 here becomes the support, you know. So if you normally trade 10 contracts, just buy 1 contract here or 2, you know, keep it really small. This is just not giving me a nice impulse wave off the low. You know, I can go 1 and 2 and 1 and 2 here and 1 and 2. I could do all of that, but it just doesn't sort of fit right. So it looks like it wants to sort of come down further in this, you know. Yeah, but I kind of got to go with the stock market, with the actual stocks, you know, because the stocks are the you know, are the bread and butter of this sort of 500 sort of moving average sort of thing, you know. Anyway, let's just have a look at the other market. So this is the NASDAQ here. Once again, we're looking for 1 and 2 and 3 and 4 and 5. So it's possible to put a top in here with all of this, but it's just the stocks are not giving me this. So this also looks a little bit like 5 waves down, but it doesn't give me 5 waves at the beginning here for this. The whole thing doesn't count very nicely, I have to say. I mean, naturally, you know, if you're learning Elliott, you'd go wave 1 and 2 and 3 and 4 and 5, but there's an overlap on 4. This doesn't really count as 5 waves down here, so there's issues with that. I wonder if you can go 1, 2, 3, 4, and 5 for the A wave and the B wave and the C wave. That's what we did. This doesn't also count as 5 waves going up here. This is 5 waves, that little 1, 2, 3, 4, 5. But this here is like in 3 waves here. So I'm getting this 3-wave move here, which is corrective. That also looks like 5 waves, doesn't it? So I wonder if we'll actually get another low in place here. But we can't short this market, as I mentioned yesterday, unless we get this as the low here. But if we're going to go short here, then we need, we need a pattern like this. So we need that first low below the level. So even if this was going to come down here, we still need that first low below the level, okay? And then we can short it. But yeah, so don't chase that through here because it'll be a trap. But this has come quite high up here as well. So yeah, I mean, the stocks are telling me it's wave 4, but I just can't see it on the indices that well. That's my problem. Not my only problem. We all carry across. Now the Russell here, this is one that gives me 5 waves down here. So in this case, we've got 1, 2, 3, 4, 5 here. So I'm wondering if we need to use some of this over here. So it's sort of an A and a B and a C wave down here. But at the same time, I can't call it wave 4 down here, can I? Because it's overlapped wave 1 here. So this is in a different situation here, this Russell. But this market, the 18 is the main, the balance line for all of this here. So if you're going to go long here, then you'll need the 1850 to go support on. Once again, it's just not giving me, it's giving me a corrective move to the upside here. Just have to be very careful about this one. This is the most bearish one, I have to say. And because it hasn't, look, it will probably be fine, but, maybe I've counted it wrong, but I can't see how I could count it otherwise, unless I just count it like the other ones and put the A wave here, the B wave here, and the C wave here. But then I'd have to look at this as a wave 2 down here for this at least, So this has got a bit of more of a bearish pattern to it. I mean, it should kick, even after 5 waves, it should kick up, So you can see that sort of happening. So it will push up, but will it can take that top out is my question. What about the old droopy draws over here? Yeah, well, yesterday we were looking for wave 4 to come back. It's done all the right things. Once again, we don't have that nice 5 wave structure up here, but we might just have to sort of suck that up. Everything's looking sort of okay at that point. So there's probably 1s and 2s in here, I guess. Anyway, my thing is, the bullish weekly cycle has worked out perfectly. So it was a bearish Thursday into the lows, coming out of that in the afternoon session, looking for Friday to be bullish. So just focus on Friday being bullish, and if you can see it bullish in the morning session, then feed the beast. And then if it's bullish in the afternoon session, continue to feed the beast right up, because then Monday will open up strong as well. And if you can get something in Monday morning, then you're halfway through the process, and profit taking Tuesday morning, trend resuming Tuesday afternoon is the normal style. So yeah, look, everything said and done, I think that that we're on the right track with everything. It's just that our wave 4s that we've been looking at haven't been that good. I can see this, what's the name, pushing up here now, so that's good. It's going to have a lot of problems in coming into group 2 here, but it should continue to push up through all of that. But I guess the thing to if this was going to be corrective here, this would just be an A and a B and a C wave here. So I'm just pointing out the bad news. So from the top here down to the bottom here, that would be if it was going to fail, this is where it's going to fail from. So just be careful about holding longs in that area there. And once that pushes up there, what that also does, if that's going to be, let's just say that all this down here is wave 1 and this is going to be wave 2 here. So I'm just putting on the trader's hat here. So this would be the place to short it now. That's the short trade because we've got the B wave low in. So you can, yeah, just be careful about all this here. If the 4,000 becomes support, then you know that you can trade up to close to 4.1 here for that, because we need to be here for about 3 days at least. Alrighty, I'll leave it at that. Yeah, alrighty. Thanks for tuning in. Enjoy the weekend. Cheers.